Snehi Shah. Over the next 1 hour, we'll take you through all the global and domestic cues that you must watch out for and also tell you about the stocks that you need to keep on your radar today. But well, let's get started with an eye on the globe and see how the US markets are faring. Of course, the US markets were closed yesterday on the back of Thanksgiving, but US stock futures, they were little change in the holiday shortened week, with the Nasdaq still on track to break its 7-month winning streak. Dow futures ticked up just about 10 points, whereas the S&P 500 and Nasdaq 100 futures, they hovered just above the flat line. Tech weakness that has put pressure on markets through November as investors are assessing the long-term profitability of AI-linked companies. Still, some traders see this month's pullback as an opportunity for a potential year-end rally, with beaten-down names looking more attractive. As of Wednesday's close, the Dow and S&P 500 was slightly lower for the week, while the Nasdaq had fallen about 2%. But overall, markets are still on pace for a winning week thanks to a tech rebound. The Dow is up over 2%, the S&P 500 about 3%, and the Nasdaq roughly 4%. The market, like I said, was closed on Thursday for Thanksgiving, and it will shut early today as well, that is on Friday. In terms of what to watch out for, it's going to be whether tech continues its rebound, how investors position for the year end, and whether November's weakness sets the stage for a Santa rally. So yes, that's about the US market. But Snehi, how are commodities looking today?
Oh yes, let's take a look at what the commodities are up to. And oil prices, you know, they've not done all that much, continue to remain range bound, but you have a little bit of a spike coming in the oil prices, about 0.5% uptick coming in for your WTI crude, around that $59 per barrel. On the flip side, for Brent, also absolutely flat, but has managed to see a little bit of a gain, eke up some gains over there. $63.4 per barrel is where the Brent is. So lots happening when it comes to oil. There are lots of factors that also come at play over here, and the big one is going to be the Russia-Ukraine peace deal talk. Now, while Ukraine has agreed to all the clauses in the agreement drafted by the US, Russia says that, you know, it's not time yet to be very positive on this deal, and on the back of some of these back and forth comments that we're seeing between these two nations, oil is eyeing 4th consecutive monthly loss, which is the longest monthly losing streak in over 2 years. This is of course on the back of oversupply concerns, but remember, if this peace deal is signed, then you have supply once again becoming steady in the market from Russia, and on the back of that, oil prices will take a little bit of a hit once again. All eyes are going to be on Sunday's virtual OPEC Plus meeting, where the prices are expected to be kept range bound once again. Remember, 8 countries are rather going to be meeting in the OPEC Plus meeting, and that is going to be very important to watch out for. So that is going to be another trigger for the oil market, and of course the stance of both Russia and Ukraine when it comes to oil prices. But let's shift focus away from oil and let's talk about what's happening in the world of gold, because you did see a little bit of momentum when it came to gold prices, about 0.4% uptick in gold prices, and now above that $4,180 per ounce. So that is where gold is. Silver is also about 1.5% higher. You have the metals that are shining bright, so that's looking good. Crypto has seen a 1.25% uptick as well. Now around that 91,000 mark is where Bitcoin is. So this is what the commodities are doing this morning.
All right, so pretty strong commodity setup as well. That's how it's looking. But let's get you some more global stories that we're tracking this morning. First up, Hong Kong's deadliest fire in decades has claimed 94 lives with 76 injured as rescuers push to complete searches this morning. Police say that the blaze may have been sparked by grossly negligent construction work, with unsafe mesh, plastic sheets and foam ceiling found across the towers. Now, 3 people from Prestige Construction have been arrested for manslaughter as investigators seized documents and devices. Nearly 300 residents remain uncontactable. Many from upper floors firefighters struggle to reach. Now, the tragedy is now shining as a harsh spotlight on Hong Kong's flammable scaffolding practices and could trigger sweeping reforms in one of the world's priciest property markets.
Okay, and Chinese giants are rushing in with major relief pledges. Alibaba and Ant Group together committed 30 million Hong Kong dollars, while Jack Ma separately pledged another 30 million. Tencent, ByteDance, Xiaomi, Anta and a wide slate of mainland firms have together offered tens of millions of more. The wave of donations follows President Xi Jinping's call for all-out efforts to reduce casualties.
Next up, Russian President Putin said that a set of draft peace points discussed by the US and Ukraine could form the basis for a future deal to end the war, but has warned that Russia will keep fighting if talks stall. He added that Washington's updated four-part framework takes into account Moscow's position and has already been sent to the Kremlin. He insisted that Russia is willing to give Europe a formal pledge not to attack, while repeating demands that Ukrainian troops withdraw from occupied territories. Putin also called Kyiv's leadership illegitimate, saying any agreement must be internationally recognized, including Russia's territorial gains.
Okay, and Pope Leo, on his first overseas trip as Catholic leader, has warned that humanity's future is at high stake, saying a third world war is being fought piecemeal amid a surge in violent global conflicts. Speaking in Turkey, the first US Pope condemned ambitions that trample justice and peace, urging leaders to resist military and economic power politics. His 3-day visit to Turkey and Lebanon is being closely watched as he begins to set out his geopolitical worldview.
Moving on, Puma shares surged nearly 19% after reports that China's anti-sports is weighing a bid for the struggling German sportswear giant. Puma, whose stock is down more than 50% this year, is deep into a reset as sales slump and tariffs hit demand. Its biggest shareholder, Artemis, owns 29%. CEO Arthur Holt's turnaround plan includes job cuts, tighter product lines, and stronger marketing. But the company has warned of a 2025 operating loss. It says that they are exploring interest through Puma has declined. So yes, that's the latest that we are picking up as far as Puma is concerned.
Okay, and Donald Trump, fresh comments coming in. He says one of the 2 National Guard members shot in downtown Washington has died, unfortunately, as new details emerge about the suspect's past. Authorities say 29-year-old Rahmanullah Lakhanwal, who allegedly ambushed the soldiers just blocks from the White House, once worked alongside the CIA in Afghanistan as part of the Kandahar Strike Force. Lakhanwal entered the US in 2021 under Operation Allies Welcome and was granted asylum earlier this year. The FBI confirmed he had previously supported US partner units in Kabul. The second Guard member remains in critical condition.
Alright, so those are some of the top global stories that we're tracking this morning. But on that note, we'll slip into a very short break. We'll be right back and tell you how the Asia-Pacific markets have opened up. And its 7th-month winning streak. Now, also remember, traders in Asia, they are assessing inflation data from Japan, and it has come in hotter than expected. So yes, let's see how the markets are doing. Japan's Nikkei is down about 0.2% at that 50,000, just holding on to that 50,000 level. On the other hand, China's Shanghai index, that's also trading in the red, just down about 0.2%. 3,866 is where the index is at. Next up, let's put the spotlight on Hong Kong's Hang Seng index, which is also trading in the red. Let's see how that one is doing. It's down just about 0.1% at that 25,900 mark. So yes, that's about some of the major indices. ASX 200, Australia's index, that's the one that's doing largely, it's slightly better. It's absolutely flat in trade, just up about 0.1% at that 8,629 mark. So yes, that's about the indices. South Korea's Kospi, that is the one that's also doing not all that well. It's the one that's witnessing the major losses today. It's down 0.8% right now, trading at that 3,955 level. So yes, that's about some of the indices on the Asia Pacific front. Now let's talk about Nifty. We did scale all-time highs yesterday, and we managed to end above that 26,215 mark yesterday. So very solid moves over there, despite it being a very volatile session that we saw yesterday. And for today, we are expecting a mildly positive start, tracking those Asian peers, and 23 points of uptick is what the Nifty implied open is suggesting. So yes, taking a positive start is what we are expecting, but a mild one, not very strong moves is what is expected at the start of the street today.
Absolutely, expecting a tempered start this morning, but at least edging towards the green is what the Gift Nifty is implying for us. But if you take a look at the way our markets panned out yesterday, yes, fresh all-time high on Nifty, which was soon followed by an all-time high on Sensex as well. Bank Nifty continues to scale from one high to the other. You had Bank Nifty that closed at an all-time high, but we did see some profit taking and a major profit taking on the Nifty and Nifty and Sensex as well, which then after the midday mark of the day managed to recover as well. So we closed absolutely flat on Nifty and Sensex, just a 110-point uptick on Sensex and barely 10 points of a move on the Nifty on an intraday basis. But yes, yesterday was a day when we scaled fresh highs on both Nifty and Sensex. It was names like Bajaj Finance, Shriram Finance, ICICI Bank. So it was overall your banks, NBFCs, financials, PSU banks. They did the heavy lifting. On the flip side, Eicher, Adani Enterprises, Maruti Suzuki were some of the stocks that were under pressure. The advanced decline ratio managed to close quite even, Steven, but for the most part of the day, it was in the favor of the declines, and that is something that caused pressure on the overall markets. But on the flip side, India VIX was low by 1.5%, so that is something that worked well for the market. Sectorally, it was the day of the IT stocks that did well, followed by FMCG. You had pharma metals on the flat line. Slight cuts in auto, energy, PSU banks and realty was the big loser on the street yesterday. So that is how our markets panned out, and it was quite a constructive monthly Sensex expiry, if you could call it so, because yes, fresh all-time highs on both the major indexes. Slight profit taking, but once again, a recovery is something that we saw. So all eyes are going to be on how the market trades on the last trading day of the week, given the kind of global handover that we've had. Yes, US was closed, but Asia Pacific looks largely mixed this morning.
All right, so that's about the Indian market, how we closed yesterday, largely flat, but of course we scaled those 26,200 levels, ended above that. But now let's put the spotlight on some of the stocks that are going to be the key drivers for the market today. And first up, let's put the spotlight on Adani Enterprises. Now this one on the back of its defense arm, Adani Defense, and its arm HASL have signed a share purchase agreement with Flight Simulation Solutions. Now they are going to acquire 72.8% stake in FSS arm worth about 820 crore rupees. So that's a big positive coming for Adani Enterprises. We'll wait out for how the stock reacts to this development. Next up on the list, we have Bandhan Bank. This one is in focus because it's going to sell unsecured NPAs worth 7,000 crore rupees to asset reconstruction companies today. So yes, we'll wait out for how the stock reacts to this development. Next up, Ashok Buildcon is also going to be in focus today on the back of a show cause notice that it has received from NHAI. This one after a girder collapsed on NH66 project and it has been temporarily barred from bidding for a one month period. However, the company has denied any negligence in the matter so far. So we'll see how the stock reacts to this development, but a slightly negative news flow is what this implies. Next up on the list is Lodha. Now, Lodha is to receive 520 crore rupees in refund as the Supreme Court has permitted reinstitution of its entire sum deposited in We Hotels. So yes, a positive development there as well. So we'll wait out for how the stock reacts. Next up on the list, another hotel name, that is Lemon Tree Hotels. This one has signed 2 new properties. The Surat Airport, the Key Prima Haridwar. These are the 2 properties that the company has signed. So yes, we'll wait out for how the stock reacts to it. Very positive developments there as well. Next up on the list, another defense name in focus, that is MTAR Tech. This one because Kavita Reddy has sold 2.45 lakh shares at a price of 2,444 rupees per share in a block deal. Now this one, as the buyers include Motilal Oswal Mutual Fund, Bajaj Finserv Mutual Fund. So these are the fine lines of the deals that we the block deal that happened yesterday. So these are the deals, official names that have been disclosed, and now we'll see how the stock reacts to these developments. Next up, we have Reflex Industries. This one is in focus today because it's got a big order win worth 100 crore rupees. This for an excavation and transportation of pond ash. So yes, big order win there. We'll wait out for how the stock reacts. Next up, Waltham Transformers. This one has received a letter of intent, that is yet another an order win is on the anvil, looks like it. This one from Gujarat Energy Transmission. The order is worth about 85 crore rupees. So we'll wait out for how the stock reacts as well on the back of this major order win. So these are some of the stocks that we are tracking this morning. But now Ashesha is also standing by with a list of another list of stocks that are going to be in focus today. Let's go to her and find out which are the stocks that she is tracking.
Well, yes, first up, let's talk about VST tillers, and they've launched a new electric vehicle power tiller and weeder, and on the back of this launch, they've also marked their entry into electric farm machinery. So on the back of companies' entry into a different product profile altogether, and also on the back of this launch, TST Villas will be in focus. Meanwhile, TCS, they've gone ahead and signed a 5 5-year deal with SAP. This is to modernize cloud and AI operations. So all of these IT companies continue to expand their AI offerings, and TCS has also partnered with SAP on the back of this. Perhaps we could see some kind of positive reaction on TCS on the back of this news. Global Health, meanwhile, they've inaugurated a 550-bed super specialty hospital in Noida. MCure Pharma, there is negative news flow over here. The company has gone ahead and informed the exchanges that GST department has conducted search and inspection operations at their Mumbai office. This was between the 24th and 26th of November. Some bit of negative news coming in for MCure Pharma. Zydus Life Sciences, meanwhile, will also be in focus on the back of some US FDA action, where US FDA has now given tentative approval. This is for a product, and the company says that this particular drug will be produced at company's formulation facility in SEZ, Ahmedabad. So US FDA approval coming in for a drug. Zydus Life Sciences in focus on the back of this. Tata Technologies on the back of an acquisition which they've completed before the slated timeline. So the company said that they've acquired 100% shareholding in ES Tech through its Singapore unit. Remember, the company had earlier said that this transaction and acquisition will be completed by the 31st of December, but this has already been completed before the slated timeline. Positive development coming in for Tata Technologies. And lastly, Bombay Dyeing, they've temporarily shut down their plant, Patalganga plant. This will be from the 28th of November to 18th of December for a period of 20 days. Production is likely to be hampered on account of this temporary plant shutdown, and they also said that they will be undertaking maintenance tasks for operations and safety at this particular plant. So on the back of this temporary suspension, Bombay Dyeing will also be in focus today.
Yeah, Shesha, thanks so much for taking us through that. But let's take a look at some important events that you need to be tracking very closely today. Now, we've seen a whole host of macroeconomic data coming in from Japan this morning. The CPI, unemployment numbers, IIP and retail sales. But shifting focus to what is expected back home today, you'll have the industrial production numbers. So India's IIP numbers will be out, and all eyes are going to be on the GDP metric that is going to be out. All eyes are going to be on whether the second quarter GDP has managed to once again throw in a 7% growth, or has that momentum slowed for us. So yes, later today around 4 p.m, all eyes are going to be on the GDP front. But shifting focus then, if you talk about Eurozone, what is expected, they're going to be releasing their 1-year and 3-year CPI expectations. So let's see what this major global economy sees in terms of inflation, where they are pegging their growth rates. This is going to be very important to watch out for. Let's talk about some corporate action expected back home. Watch out for Thyrocare. That stock will be trading ex-bonus in the ratio 2:1. Autumn Investment Board is going to be meeting to mull a bonus issue today, so watch out for that. And Patel Engineering Board is going to be mulling rights issue as well. Remember, big order win for that stock yesterday. That stock was up 15%. So another rights issue announcement coming today could maybe keep the stock in focus once again. But shifting focus to the primary markets, you have Sudeep Pharma IPO is going to be making its Street debut. So all eyes are going to be on how Sudeep Pharma lists. And lastly, in terms of some other events, it's going to be an exciting weekend for everybody in the US as well as back home over here, because you have retail sales that are going to be starting on the back of Black Friday. The shopping rush is going to be seen over the course of the weekend, closely followed by Cyber Monday on Monday, of course. That's the online sales coming in. So yes, this fever has taken over Indian malls as well, and retail numbers are expected to be strong this weekend, Kanishka.
All right, Snehi, we'll discuss on Monday what all you've shopped during the Black Friday sale. But for now, we'll slip into a very short break. We'll be right back with more news and updates on the other side.
Now, in the guidelines released, SEBI has specified that that can be 1% commission subject to a maximum of rupees 2,000. But there are caveats on the same. The caveat is that investment must remain for minimum 1 year to qualify for such kind of incentives. So also, the payout will be done from 2 bits investor education and awareness allocation. So now that has also been specified where that money will come from. But there is also a caveat which has been given that there should be no dual incentives. Also, the fund of funds with more than 80% domestic allocation and ETFs which are just for 1 year duration do not qualify for such kind kind of incentive for distributors, and the final guidelines will be released by MFI within 30 days, but this will be effective from 1st of Feb 2026.
Okay, Ankur, thanks for taking us through that. The big macro point is going to be GDP to watch out for today, because GDP growth in the second quarter is expected to be around 6 to 8.5% on the back of recovery driven by agriculture, manufacturing and construction. Mitali is here with more details on what to expect from the GDP numbers later today and what are economists pegging in for this number.
Right, so we see that India's economy is ready to post another quarter of strong growth. Ahead of the official release later this week, economists are forecasting 7.3% of GDP growth for quarter 2 FY26, signaling continued momentum despite the global uncertainties prevailing. Now, the Reserve Bank of India has projected 7%, while the brokerage estimates come in at a slightly higher estimates ranging between 6.5% to 8%. And the strong performance is driven mainly by the rural demand due to better agricultural output, better monsoon and easing inflation. Growth in agriculture, manufacturing and construction, along with higher government spending for this quarter, also supported the economy. Now, however, private investments remained weak as companies are still hesitant to expand amid the global uncertainties. In recent quarters, we saw that India grew 7.8% in quarter 1, while 7.4% was GDP growth for quarter 4 FY25, making it one of the fastest growing major economies in the world. But as of now, the economists warn that growth may slow slightly in the coming quarters to around 6.8% and 6.3% due to global headwinds and the investor outflows seen in the last couple of months. But for now, India's quarter 2 numbers look solid, with the economy set to throw another 7% plus of performance.
All right, so that's about the GDP expectation, but let's move on and talk about the economic review as well. Now, Finance Ministry sees a stable footing for Indian economy in the second half of this fiscal, and my colleague Prakash Priyadarshi is here with the details of of the October economic review here.
Well, the Finance Ministry has come out with the monthly economic review report for month of October, wherein it has underlined that the overall macroeconomic fundamentals of the Indian economy remains stable amid complex geopolitical situation and challenges coming from external sectors. The report also says that the positive impact of GST rationalization is quite visible in the economy and consumption indicators. Along with that, there is robust agriculture activity which has been observed during the month. Corporate performance remains healthy. The report has also noted that domestic financial markets continue to draw a strength from firm institutional participation. Along with that, hiring sentiments remain strong, and when it comes to inflation, the report has noted that the inflation outlook remains encouraging. Along with that, the positive part of this overall observation is that there is notable increase which has been observed in households' financial investments, which is a very positive signal for the Indian economy. Along with that, merchandise exports are largely affected due to external factors, but getting a strength from strong services exports. However, global uncertainties pose potential risks to exports, capital flows, and investor sentiments.
All right, so that's about the October economic review, but let's move on and talk about food services in India. Now, India's food services market is expected to grow to $120 to $125 billion by 2030. That's the key finding of Swiggy and Kearney's report on how India eats. Now, the report has also forecast that organized sector will surpass unorganized in the food services segment over the next 5 years. Our colleague Sumita Kareed had an exclusive conversation with Rohit Kapoor, the CEO of Swiggy Food Marketplace. On this report, let's take a look.
We are seeing, it's trending to plan. Let me put it this way. I think we are happy with some of the momentum that we're seeing in the category, right? But equally for us, it's New Year's is all about while the world parties. We prepare very heavily, and we are in office that day serving our consumers, and we love it actually because being able to be relevant to our consumers and their high points and their in their journeys. And look, I love Christmas. It's all.
But you love
like,
numbers too, so
yeah, and it's good. It's like Diwali or any other time.
In?
I think I think we're penciling in a good. Looks like a good Christmas and New Year, but it's a month out, so we'll see. So we are evaluating it consistently, and I think it has to. We look at compliance to whatever the laws of the land require us to comply with. I think it looks at impact on all stakeholders, but this is something that we are not close to. But equally, I don't think we have taken a decision at this point in time what to do with it.
All right, so that's all about how India eats. But moving on, the PFRDA chairman Siva Subramanian Ramanan tells ET Now that new multi-scheme framework is seeing a strong early response with NPS equity contributions jumping nearly 30%. But he added that India needs a much larger voluntary push. A new structured payout product is coming soon, offering 15 to 20-year systematic withdrawals as well. Gold and silver ETFs may also be allowed within the existing 5% alternative cap. So here's an excerpt of that chat.
Target is really for inclusive growth. Okay. So we have to look at how many more people are coming in, and therefore we have given some kind of a larger target to the pension funds that they must bring in at least 80% new people into the NPS as compared to what we have today. Okay. So the new schemes must have typically a 80% new subscribers and only 20% existing subscribers.
Okay. So there are a few new products are also lined up. So by when the new product will be launched?
No, the new products are actually to do with the structured payouts, and that is a consultation paper which is already out. We have 3 models in that. The first model being a relatively simple one where the benefit to the subscriber is that they can put their money in for 15 to 20 years and draw down the money in small amounts of 3 to 5% per year, so that it stretches over that period of time. And during that period of time, they will get the benefit of the growth in the assets where their money is invested. So in a way, it becomes like an inflation shield for their future inflows. So this is the way we have structured it. It's basically a structured payout mechanism, and we're hoping that this should be getting popular. We will launch it with the help of the pension funds shortly. I can't give a timeline, but they need to be able to build sufficient capacity within their own teams so that they can manage this.
All right, so that's the latest word coming from PFRDA chairman. But moving on to the Tata Group. The Tata Sons board meets today with a packed agenda. The board is expected to review underperforming group companies, examine a more cost-effective revenue model for Starbucks joint venture, and also discuss the filling of the director vacancy that's created by Vijay Singh's September exit. My colleague Anurag Joshi is here with all the details of this board meeting due later today.
Tata Sons is scheduled to hold its board meeting on Friday. The board is likely to review the performance of certain group firms that are lagging on financial and operational metrics. Sources have told ET Now. The board will also discuss a more cost-effective revenue-generating model for the Starbucks joint venture, Tata Starbucks. And it may also discuss the matter of filling the vacancy of the director's post following the resignation of Vijay Singh in September. It could deliberate on steps to support JLR that reported huge losses in the last quarter following a cyber attack. The board may also take a close peek at the performance of the digital business and including the super app Tata Neu. The meeting is coming on the heels of the appointment of Neville Tata and Bhaskar Bhatt as trustees of Sir Dorabji Tata Trust. Neville Tata is the son of Tata Trust chairman Noel Tata, while Bhatt is a former Titan company managing director. The trustee, Mehli Mistry, left Tata Trust earlier this month. And Mystery's departure followed almost 2 months of acrimony and tensions in the trust's board.
All right, so that's about the Tata Sons meeting due later today. But moving on, the government has released draft rules for insurance ombudsmen. Now, my colleague Anurag Shah is here with all the details of this latest proposal.
Government has issued draft rules for major revamp in ombudsman system, and these draft rules are open for next 45 days for any suggestion and objection before the final notification. So under the draft rules, IRDA will set up appellate authority within 6 months for appeals against the order passed by ombudsman. Other than that, every complaint must be registered within 1 working day. That is also suggested, and the system will be online. The filing complaints, uploading document, tracking status, Aadhaar enabled authentication. That all will be online is mentioned in the draft rule. The brokers are also formally added to the ombudsman system, covers insurance brokers along with insurers and intermediaries. So this is also a new development that insurance intermediaries are also will be part of insurance ombudsman system. Then Ombudsman and appellate bench to submit financial needs for next year by 31st January. That is also mentioned. And 5-member committee to periodically review ombudsman and appellate authorities' performance. That is also mentioned under the new draft rule for ombudsmen, which are open for next 45 days before the final notification.
All right, so that's about the latest on insurance, but let's move on and take you through another exclusive of ET now. Now, Trivitron Group CMD shares with us their outlook on the medical tech industry and the opportunities they can ride on. Let's take a look at this exclusive conversation.
Thank you, Jude, for having me on the show. The MedTech is the emerging sector. If you look at health services, maybe healthcare as a whole, there are 4 core segments. One is pharma, second is health services, third is medtech, and fourth is medical education. So in that, I think if you look at health services, it got the attention over the past few years. Pharma has been the early raiser in this industry. Then came the single specialty. Now we are seeing a lot of attention in the medtech space because medtech today is still 80% import dependent. So now I think there's a lot of initiatives, government supported initiatives happening in terms of Make in India. That really is driving the investor interest in this space. I'm sure it's going to be here for a long time to come.
Right. So do you feel a lot more investor interest will lie in manufacturing, given the fact that MedTech was so import dependent, but that's changing now? So manufacturing is one area that could see investor interest. Where else do you see a whole lot of?
So manufacturing is one. Then AI enabled healthcare. So even in tech, AI is playing a big role. Robotics is playing a big role. So all this, India is well poised to take advantage of the changing ecosystem in the personalized medicine arena.
Right.
So AI in diagnosis, AI in treatment planning. Then also if you talk about robotics, then the areas like genomics, proteomics, metabolomics. So we have a huge amount of humongous clinical data available with us. So that will make us a front-end player in the medtech space.
Right. In fact, we'll come to AI in just a bit, but I want to break down the kind of investments that you're seeing within the medtech sector itself. Like you rightly said, it accounted for half of all investments in 2024. Hospitals continue to be a strong player, coming in second. Deal sizes have also vastly improved in the recent past, but within the healthcare space, if you take a look at medtech itself, where do you see the share of overall PE and VC investments within medtech growing henceforth? What is the growth trajectory that you foresee?
So I think in vitro diagnostics is where we will see a lot of investments. Then implantable devices is the second one, and we still have, when it comes to capital instruments, the China is still leading the race, but I'm sure India also will catch up at some time when probably the medical electronics based medtech also takes its own share. But currently a lot of investments in vitro diagnostics and medical devices, especially implantable devices space.
But where do you see this growing from year on year, Dr. Velu? Right now, it does occupy a very healthy percentage in terms of investments itself, the overall overall investment scenario. Do you see growth year on year on a sustained basis?
No,
and if
I
yes,
think
to what extent?
Overall healthcare, if you say I'm, in all our companies now, we got investments in two of our companies, which is both Newberg and Maxivision over the past 2 years. And we hope Trivitron is also one of our, we see a lot of investment interest there. And a lot of other Indian companies are also getting huge amount of investment interest, including control transactions have happened, which we thought will happen. So the PE investors are looking at MedTech as a very big area of growth.
All right, so that's the latest exclusive with the Trivitron Group. But moving on, let's get you some more updates on the national front. Prime Minister Narendra Modi hosted the Indian blind women's cricket team, which recently clinched victory at the blind women's T20 World Cup. Prime Minister Modi warmly interacted with the players who shared their experiences from the tournament. Well, in a blockbuster moment at the Women's Premier League 2026 auction, Indian all-rounder Deepti Sharma lit up the room with a record-breaking bid that left franchisees scrambling and fans buzzing. The star performer, known for her icy composure and game-changing spells, emerged as the
and the expiry of anti-dumping duties on PVC resins and opened the domestic market to cheaper imports predominantly from China, leading to a pricing pressure. And these developments have already triggered an immediate ₹3 per kg price fall from the 15th November, taking the total decline to ₹6 per kg since the beginning of this quarter. And according to Nuvama research, PVC prices remain under pressure as import has been offered to at 61 to 62 per kg versus Reliance price of 66 to 67 per kg, indicating a likely further drop of 3 to 4 per kg. And weak demand trend continue not only in India but also in Europe, where even European PVC manufacturers are seeking an anti-dumping duty protection. And the consequence of this environment, there has been inventory losses, weaker volumes and aggressive price-led competition, and ultimately hurting the margins and profitability of the domestic pipe companies. Furthermore, India remains heavily dependent on the import, while China holding the largest share of PVC export. And despite the short-term challenges, there are some tailwinds for the industry. The traditional PVC price segment is expected to grow at a 6% CAGR, with further also hanging on the new product and categories such as PVC. And a demand recovery is expected in the second half of FY26. And management piping industry companies also remain confident for the second half of FY26, where for Supreme Industry they expect a better margin improvement in the second half of FY26, and company has gained a market share in CPVC. And also continue to gain a market share, which is by improving construction. They also say that the company there is a improvement in the construction activity post the monsoon. And while Phenolics industry also expect mid to single digit volume in FY26. And if we look at the stock tracker of the plastic pipe companies, then in last 1 month Supreme Industry is down 11%, and in 6 months stock is down 19%. And Astral has outperformed the Supreme Industry, where Astral is up 1% in the last 1 month and down 4% in 6 months, and Phenolics industry down 5% in 1 month.
Right, thank you, Ravinder, for that update. A very detailed analysis there. But now let's talk about D Street. We did see fresh highs yesterday, but which are the stocks that can outperform and have the highest return potential over the next 12 months? Ashesha is here with all of those details. Ashesha, over to you.
Well, yes, Nifty scaled its fresh record high in trade yesterday. So we decided to take stock of the kind of stocks that could see the highest return over the next 1 year. We decided to collate this data, and first up from the Nifty 50 index, we have NTPC at the top of the list, where analysts believe that we could see 27.5% return over the next 12 months with a target of 417. Bajaj Finance and Eternal, meanwhile, could give returns of nearly 27% each over the next 12-month period. So these are the three Nifty 50 stocks which analyst community are most bullish on when it comes to the next 1 year period. Let's also put the spotlight on a few other stocks. We have Trent and ITC, which could give returns anywhere between 22 to 26% with target price at 5355 and 494 respectively for Trent and ITC. So these are some stocks from the Nifty pack. Let's also put the spotlight on Nifty Banking Index. Remember, Nifty Bank Index has outperformed the broader markets over the last 1 year, and now analysts believe that ICICI ICICI could see about 22% return with a target price of nearly 1700 rupees per share. Kotak Mahindra Bank and HDFC Bank could also give returns anywhere between 12 to 14% over the next 1 year. This, remember, is basis the consensus estimates which we have derived from Bloomberg. ICICI Bank, Kotak Mahindra Bank and HDFC Bank. These are the three banking stocks which analysts are most bullish on. SBI and Bank of Baroda from the public banking sector pack could also give returns anywhere between 8 to 10%. So that's the pack from the Nifty Banking Index. Let's also talk about mid-cap stocks which analysts are most bullish on. Kalyan Jewellers could see returns of nearly 39% with a target price of 684. Suzlon and IRB Infra could give returns between 30 to 35% with target price ranging anywhere between 56 to 74 rupees for both of them respectively. So Kalyan Jewellers, Suzlon, we have Swiggy and Godrej Properties which could give returns of nearly 28%. Let's also put the spotlight on the small cap index then. We have Aditya Birla Retail which could give returns of nearly 56%, Brigade Enterprises, Aptus Value 40 and 42% respectively. 1278 is the target price for Brigade Enterprises over the next 12 months. Inox Wind and First Cry could also give returns of nearly 40%. So these are some stocks which analysts are most bullish on for the next 12-month period, and this is based on the consensus estimates that we have derived from Bloomberg.
Thanks, Ashisha, for that update. So lots of stocks with very heavy potential for good returns, especially NTPC, return potential of about 27.5%, Bajaj Finance, Eternal, Trent, ITC. Those are some of the stocks that are that have the largest potential to achieve their targets over the next 12 months, which have been set by estimates by analysts for the next 12 months. So yes, those are some of the nifty stocks with the highest potential. But let's also talk about another stock which is going to be in focus today, and that is GAIL. And this one will be in focus as PNGRB has announced a 12% hike in tariffs for integrated natural gas pipeline. And Ashesha is back with us to take us through an entire analysis of what is going to be the impact of this move.
Well, yes, so PNGRB has gone ahead and announced a 12% price hike in tariffs for GAIL's integrated natural gas pipeline, which will come into effect in January 2026. Now, remember, this is lower than what the street was working with and even lower than what GAIL had recommended. So, GAIL had recommended a 33% tariff hike and it has just come in at 12%. Now, remember, PNGRB has also gone ahead and said that this is interim relief. They didn't want to go ahead and announce a sudden hike of 33%, and hence 12% is just interim. Perhaps they will go ahead and announce some more tariff hikes in the coming fiscal, and by FY28 several other price hikes could also be announced. We have Citi which has come out with a report on this. They say that they expect the stock price to react negatively. 12% is lower than what the street was working with, but they've gone ahead and said that they will announce further price hikes going forward, and hence GAIL is expected to react positively on the back of this clarification.
So that's GAIL in focus. With that, we're completely timed out on this edition of Market Cafe. I'll take your leave, but don't go anywhere. The market's coming up next.
What? That's the holiday, isn't it?
When you fly Emirates,